Let me zoom ahead here on the same chart in American Express to June 12th. And I'll show you a particular inside day that I would not trade. Here we have a large red bar which indicates that bears were in charge of this day. The American Express stock sold off pretty dramatically on this particular day. The very next day you have a bar in which there was a lower high and a higher low than this particular bar. That would fit the definition of an inside day. The only problem with this particular bar is it's almost the same range as the bar that precedes it. So when we're looking at identifying inside days, yes, it does fit the definition, but I would not trade this particular inside day. I would like to have an inside day that's approximately 50% or less of the bar that precedes it. That's just my personal choice. We have traded 60% or even 70% of the previous bar's range using inside days with success, but generally if you want to keep your risk as low as possible, then you'd like to have a smaller inside day bar or narrow range bar in comparison to the one that you're measuring it against, the previous day's bar. Okay, so once you've identified an inside bar that you'd like to take advantage of, the only thing that you really need to do is to go to your drawing tools. Now most brokers' software platforms include a number of different technical analysis tools, and many of those also include channel tools. In the platform that we're using, this is the Thinkorswim platform, and we're using the profit charts. All we do is go into our drawing tools, come down to our channel, click on that, come over to the place where we would like to start the channel, and we want to start the channel right at the high of this particular bar. We right click on that, and then we draw out the beginning of the channel on the top of the bar, and then we simply click again, right click again, as soon as I can get this straight here. Doesn't have to be perfect, and then we just drag this down to the lower end of the bar. That sets up our channels. Now in this particular case, I have a higher end channel, I have a lower channel at the bottom of the particular bar, and I also have these 25% channels inside of those bars, and I will explain to you for aggressive traders when we get into our entrance criteria exactly how I use those. But that's how you begin. You begin by drawing the channel against this particular bar, our inside day. This gives us the beginning of our setup. It's important to understand why this particular trade works. The goals really of bulls and bears are always to push prices higher if you're a bull, of course, or lower if you're a bear than the previous day's high or low. When that doesn't happen, then their power struggle ends in frustration. Inside days happen when there's really a fight between the bulls and the bears. In fact, the strength of the bears and the bulls are about equal, and neither side really gains any ground in pushing the stock higher or lower. And that's why it ends up as a day that has a less of a range of movement than the prior day. So neither side could push the price in the direction they wanted, and it creates just a little movement in either direction. And that creates short-term frustration. Usually the power struggle lasts no more than a day. It's extremely rare to have a narrow inside bar followed by another narrow inside bar. In fact, the odds are extremely low that you would have an inside day followed by another inside day. If you ever see one, you might want to add to your position because the price move could be really outstanding. Trading inside days is like trading a shook-up bottle of soda pop, or whatever you like to call sweet carbonated drinks in a bottle. When you shake the bottle, you twist off the cap and it explodes. Those who wanted to push the prices higher or lower will try again the next day, and usually one side will overpower the other and win. It's like a tug of rope. Eventually one side is going to dominate. For example, if the bulls outnumber the bears, then on the following day prices will go higher. And conversely, if the bears outnumber the bulls, then on the following day the prices will go lower. And that's how we profit. We simply take the side of the group that has the most power to push prices in their direction. Specific criteria is going to help you stay out of trouble and minimize your losses. So let's get into the entrance criteria for trading inside days. The entrance criteria could not be easier. However, I don't recommend placing this trade just prior to an earnings announcement. Since you're only going to be in the trade for a few days, really 4 at most, you can plan accordingly. If you know that earnings are coming up, I would stay out of the trade because of the potential potential for the stock to either gap very much higher or very much lower than your entry prices. Our entry criteria for this position is basically what we do is we take a penny above the high of the nib to enter our long position, and one penny below the low of the nib to enter our short position. Let's take a look at exactly where those positions are. For this particular inside day, our entry on the long position would be $44.58 on the long side. Now, as I hover my mouse over this particular inside day bar, you can take a look up here to see exactly where the high was. The high was $44.57 on this day. We simply add a penny to that, and we create our entry price of $44.58. At the same time, what we want to do is create our entry price for the lower end of the trade. If you take a look at this bar again, you can see that the low is $43.71. So we want to subtract a penny from that and create our entry at $43.70 short. In other words, if the price the very next day breaks through the lower end of this inside day's trading range, then we want to go short at $43.70. If it goes above the high of the trading range of this inside bar, then we want to go long at $44.58. What we want to do is we want to see who has the most power on the day after this inside day is created. We want to see which way who's going to win this tug of war. Is it going to be the bears or is it going to be the bulls? The things that you need to calculate include the range of this particular bar. If we take the high of the bar, which is $44.57, and we subtract it from the low, which is $43.71, we get a range of the inside day of 86 cents. In order for us to determine our targets, what we do, we take the range of the price and simply add it to our entry price. In this case, our first target is $45.44, which is $44.58 our entry price, plus the range, which is 86 cents, for a target first profit target of $45.44. Now, before this bar was created, we would have these set up on our charting system.